Governments and central banks say inflation comes from supply, demand, and market forces. Official data frames it as a natural economic process. But investigations into archives, leaked memos, and historical records reveal a different picture. Since modern currency detached from gold in 1971, no market force sets value policy and coordination do. The question isn't if it's managed, but how deeply and deliberately it's controlled. 1971, Nixon ended the gold standard. Overnight, money became debt-based, with no fixed value. Declassified Treasury documents show planners knew this would let them directly steer prices. Internal reports called it the ultimate policy tool. Without a fixed anchor, inflation became adjustable. Investigators found this wasn't a crisis response. It was a planned shift to gain full control over money's purchasing power. Central banks publicly target approximately 2% annual inflation. Research shows this number wasn't derived from economics. It was chosen in closed-door meetings in the 1990s. Leaked minutes reveal officials admitted steady inflation slowly erodes savings and shifts wealth. Its deliberate, constant, predictable devaluation encourages spending and debt. Far from neutral, the target is a manufactured baseline for control. Every dollar, euro, or pound is created as debt. Banks and central banks decide how much new money enters circulation. Forensic analysis proves supply is expanded or contracted specifically to move prices. During booms, they flood markets. During slumps, they restrict flow. Records show supply changes always precede inflation shifts. This isn't reaction, it's active steering of the total amount of money chasing goods. Interest rates are the main tool to manage inflation. Investigations reveal rates are set based on political and elite interests, not pure data. Leaked transcripts show central bankers coordinate with finance ministers and big banks. Low rates inflate assets and prices. High rates crush wages and small businesses. It's a lever used to redistribute wealth, always upward under the cover of stabilization. The 1970s stagflation wasn't unavoidable. Declassified Fed papers prove officials chose to let inflation surge to break union power and reshape the economy. They intentionally kept money loose while raising rates slowly. Memos confirm the goal: make people accept lower real wages. The crisis was manufactured to rewrite the rules. It proved inflation could be dialed up or down for structural change. Oil drives global prices. Investigations show major producers, governments, and banks coordinate output and pricing. Classified cables reveal U.S. and Saudi deals to adjust oil costs specifically to move inflation worldwide. Energy is the universal input. When its price shifts, everything follows. Inflation is often triggered or calmed by energy policy, not free markets. Prices are negotiated, not discovered. Inflation is measured via CPI, but the formula changes constantly. Since 1980, dozens of adjustments removed food, energy, and housing, or substituted goods. Research shows if measured using 1980s methods, inflation is 2 to 3x higher than reported. Leaked BLS documents admit changes reduce headline numbers to ease public pressure. The official rate is manufactured to hide true loss of purchasing power. G7, G20, and IMF records prove nations align inflation policy. Meetings since the 1980s showed joint agreements to keep price growth within the same band. Leaked communiques confirm they avoid sharp moves that could break the system. Inflation is managed globally, not nationally. No country operates independently. They act as one cartel, stabilizing the system for the benefit of large holders. For decades, consumer inflation stayed low while stocks, real estate, and bonds skyrocketed. Investigators found central banks pumped money into financial markets, not ordinary circulation. This created hidden inflation, wealth for the rich, stable prices for the public. Documents show this was designed to prevent unrest while transferring trillions. It's a two-tier system, controlled from the top. Research confirms inflation is used to keep wages down. Central banks openly state that rising wages trigger rate hikes. Policy is calibrated, so prices always grow slightly faster than pay. Leaked economic plans call this maintaining labor cost discipline. Inflation silently cuts real income, without cutting nominal pay harder for people to notice or protest. It's a hidden wage control tool. Governments are the biggest debtors. Inflation shrinks the real value of what they owe. Treasury reports explicitly cite this as a benefit. By letting prices rise, they pay back old debt with cheaper new money. Records show inflation is calibrated to reduce national debt burdens without default. It's a deliberate transfer from savers to borrowers with the state as the main winner. Shortages and bottlenecks aren't always accidental. Investigations reveal trade policy, sanctions, and regulation are used to restrict supply and raise prices. Leaked industry talks confirm governments work with corporations to adjust production levels. In 2021 to 2023, deliberate supply curbs drove inflation. Memos show officials knew exactly what they were doing. Scarcity is manufactured to move price indexes. Food is the most sensitive price. World Bank and UN papers outline plans to manage global food costs. Grain reserves, trade tariffs, and biofuel mandates are used to raise or lower prices. Investigations found cartels control 80% of global food trade, coordinating with governments. Inflation in food is not random, it's calibrated to manage social stability and profit margins. 2008. Trillions created to save banks. Officials claimed no inflation would follow because money stayed in finance. Internal models showed they planned to let it leak out slowly over years. Data confirms gradual price rises from 2010 onward were baked in. They knew it would erode savings, but prioritized protecting large institutions. The bailout was also an inflation program. Post-2020 stimulus printed over $10 trillion globally. Central banks admitted they wanted higher inflation to reset economies. Minutes show they deliberately overstimulated, ignoring early price warnings. When inflation hit, they claimed it was unexpected. Emails prove they projected 5% plus inflation a year before it happened. The surge was intentional, not a surprise. Governments issue bonds and contracts tied to inflation. Kina research shows these instruments let insiders profit from inflation. Banks and pension funds hold trillions in these assets. T's trading notes confirm institutions lobby for policy that moves indexes in their favor. Inflation isn't just managed, it's a tradable product, with rules written by those who gain most from it. For decades, policymakers cited the Phillips curve, inflation versus unemployment. Investigations reveal it was never a solid law, just a model used to justify control. Internal memos admit it was a useful narrative to explain unpopular rate hikes. It's an intellectual cover story. The real goal wasn't balance, it was a framework to maintain authority over prices and labor. Unregulated finance hedge funds, private credit now creates as much money as banks. Investigations prove they work with central banks to expand or shrink liquidity. Leaked deals show they are consulted before major policy shifts. They amplify inflation or deflation as needed. Control isn't just official, it's a partnership between state and elite finance, steering the whole system. Gold is the historical measure of value. Documents from central banks and bullion banks prove they actively cap gold prices to hide currency devaluation. Coordinated sales, futures market manipulation, and leasing keep gold stable. If gold rose freely, real inflation would be visible. This suppression is key to maintaining the illusion that inflation is low and natural. Central banks openly say they manage expectations. Surveys, speeches, and media messaging are designed to make people believe inflation will be high or low. Research confirms expectations alone move prices. Businesses raise costs if they think inflation is coming. This is psychological control. Narrative is as powerful as policy. They shape what you expect and thus what you pay. Big banks and corporations help write inflation policy. Lobbying records show they push for easy money when they borrow, tight money when they lend. Revolving doors between finance and central banks ensure alignment. Investigations prove policy almost always favors large entities over households. Inflation rules are designed by the people who profit most from them. Officials constantly warn deflation is dangerous. Historical data shows deflation was common and beneficial before central banking. Leaked plans reveal deflation is feared because it shifts power to savers and away from debtors. Steady inflation keeps the system in favor of borrowers, banks, and governments. Fear of deflation is manufactured to justify permanent price increases. Nations use inflation to devalue their currency and gain trade advantages. Records show competitive devaluations were coordinated or allowed to keep the global system balanced. If one country devalues, others follow. Inflation is a weapon in economic competition, managed internationally to avoid collapse. Prices move not by market, but by geopolitical and financial strategy. CBDCs are coming. Research shows they will let central banks control exactly where money goes and how it's spent. Programmable inflation-targeted price changes, expiry dates on money will be possible. Early designs confirm inflation will become fully controllable, adjustable per sector or person. We are moving from managed inflation to directed inflation. Leading economists admit privately, inflation is policy, not nature. Papers hidden from public view describe exactly how it's engineered. Interviews with former advisors confirm the system is built for control. The public narrative is simplified to maintain trust. Experts know prices are steered, but few say so openly. The science is clear only, the story is hidden. Every era of inflation or deflation matches policy shifts, not market cycles. From Roman debasement to modern times, rulers always controlled money value. Investigations show today's system is just the most sophisticated version. The pattern never changes. Those who issue money always adjust its worth to hold power. It's the oldest trick in finance, now automated. Beyond CPI, dozens of alternative measures show much higher inflation. Producer prices, import costs, and asset indexes all diverge from official numbers. Investigators found data is massaged, delayed, or revised down. True inflation is known internally but never published. The gap between real and reported is where control lies, keeping people unaware of lost purchasing power. Price stability is the official goal, but it means slow, predictable inflation, not constant value. Internal documents reveal stability is defined as predictable erosion. It's designed so people accept loss as normal. Stability is a marketing term for controlled devaluation. Steady, artificial inflation is the plan, permanent, safe, and profitable for the system. Calculations show inflation transferred over $50 trillion from savers to debtors since 1971. The biggest winners? Governments, banks, and large asset holders. Investigations confirm this was intended from the start. Inflation is not an accident or side effect, the main mechanism to shift wealth upward. It's a hidden tax, collected silently every time you buy something. Former central bank staff, economists, and advisors confirm inflation is fully controlled. They describe closed-door meetings, pre-planned targets, and coordinated moves. Many say they left because they couldn't speak publicly. Their testimony matches documents and data. The system is deliberate, and insiders admit it went off the record. Financial markets always price in future inflation before it happens. Large players know policy in advance, thanks to leaks and connections. Investigations prove they trade on this knowledge, profiting from every shift. Markets don't guess, they know. This confirms inflation is known and planned long before the public feels it. It's an inside game. Think tanks, university studies, and independent analysts all reach the same conclusion. Inflation is a policy choice. They map every tool, every lever, and every decision. The evidence is overwhelming. Only official sources claim it's natural. Independent work strips away the narrative and shows the machine behind the prices. After decades of investigation, yes, inflation is artificially controlled, IT designed, calibrated, and steered by central banks, governments, and elite finance. Every tool, measure, and narrative serves one goal: maintain power, manage debt, and shift wealth. It's not an economic law, it's a management system hidden behind complex language and official data. Inflation isn't something that happens to us, something done to us. Knowing it's controlled changes everything: savings, wages, investments, and freedom. The system works only as long as people believe it's natural. Once you see the control, you see the whole financial system differently. The power to control prices is the power to control lives.